Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
Good morning. This is your co-host, Katrina Madewell, with the Mr. Darrin Mish.
The IRS Solution Attorney, Darrin T. Mish.
So this week's show, we're going to talk about something that hopefully should be right on point for most people listening. And it's going to be people worried about their 2015 tax bill. Like these people that have got their stuff together, maybe they filed or they're getting ready to file. And they're right about that time, they're like, oh, I have a pretty hefty tax bill. Not really sure what to do with that. So I'm sure Darrin has some wonderful tips that can lead us into that conversation.
You know, it's kind of funny to think about someone who's just generating a tax bill, you know, the second month of 2016, and they're worried about 2015. I'm just so accustomed to dealing with people that, you know, haven't filed a tax return in 5 or 10 years and owe hundreds and hundreds of thousands of dollars. So this will be kind of fun. Let's focus on
just
the
a
positive.
current tax bill's easy.
Yeah, let's focus on the positive, like we say in the show intro. And let's try to help some people who, you know, think they might have some tax bills that are manageable at this time of the year.
And by the way, we are live in the studio, so after the first segment, we'll open it up for questions. And our studio call-in lines are 888-404-1010. Again, 888-404-1010. If you have any questions for Darrin Mish, the IRS Solution Attorney, we're going to get you through these tips, and he'll be happy to answer those for you.
Now, I feel uniquely qualified to talk about this, not because I've helped, you know, hundreds or maybe even thousands of clients with tax problems over the years, but I have faced this exact issue on more occasions than I would like to care to admit. So the first thing I would say is, you know, if you've had your tax return prepared and you know that you're going to owe, just don't panic. That's the first thing, is just chill a little bit and don't panic and try to come up with a plan. You know, it's going to seem to some people like it's the end of the world, but it's not. You know, you just have to keep your head on straight, and that's going to help you make correct decisions and good decisions early on in the process so that it doesn't become a catastrophe, you know, or literally the end of your world as you know it.
So my question is, let's say you've got everything together, you've got your tax return ready to roll, and then there's this big number, and you're looking at going, oh, snap, I realized I had a good year last year, didn't quite realize it was that good. What, should they go ahead and file the return anyway and deal with the bill later? Like, or should they wait and file it, try to come up with the money? Like, I'm thinking maybe this is how some of these things create this domino snowball effect. Am I ahead of it?
Yeah, so my first comment is hold everything.
Okay.
You know, we're only in February here. There's no need to be filing a balance due return at the very earliest until April 15th. And this year, I believe the filing deadline is the 18th or the 19th. It's
All
the first,
on a weird day or something?
There's a... I think it's a little bit after the 15th, but just, you know, we can look that up. I think it's the 18th. There's a holiday in there somewhere.
The post office is usually open till midnight.
Yeah, for sure. The Tampa International Post Office is open till midnight. Not every post office, but...
So the 15th this year it falls on a Monday? No, that's February. Well, it helped I went to April. It's on a Friday.
Yeah, there's some kind of holiday situation there for sure this year, so you don't have to file until the following Monday.
Sweet.
And if you're up in Massachusetts or Maine, you don't have to file till that Tuesday because Monday is Patriots Day up there. So,
alrighty then.
Yeah, that's some kind of unique New England type holiday that us people down in Florida don't really know that much about, I guess.
I guess it comes with those extra Super Bowl wins. I had to go there, yeah. Okay, on track.
Yeah,
tax bill.
That's for sure. So don't panic. You know, I would say if you self-prepare your return and you're a small business owner and you have a large tax bill, you might want to go visit a tax professional to rerun the numbers and maybe talk to you about some of the deductions that you might have available to you.
Yeah, because the likelihood is you missed some stuff if you did it on your own.
Yeah, almost certainly. You know, there was a study one time that really demonstrated that tax preparation is more of an art than a science. They actually had 50 tax preparers look at the same scenario and asked them to prepare that return, and they came up with 50 different tax returns.
Oh, my God. So with the numbers probably ranging all over the place.
Right, with the taxes, you know, the balances due ranging all over the place. So that would be my first suggestion. If you're self-employed or have some kind of situation where you have a lot of deductions, then you're going to want to have somebody take a look at it before you file that thing.
I forget what the stats was. I just saw this recently, like when someone prepares your tax returns versus self-preparation, it's a pretty good percentage of things that get missed, and the refund's higher or the amount you owe is less.
Well, for sure. I mean, everybody has their job, right? Everybody has their career and their profession that they engage in. And if you're not a professional tax preparer and you have a complex tax return, then you should not be doing your own return. I mean, self-disclosure here, I don't do my own return because that's not really what I'm really good at. I'm really good at solving IRS problems and disasters, catastrophes. And so I have my in-house accountant go ahead and prepare my tax returns because I think that he's better qualified, you know. So the next thing I would say is if you have generated a large tax bill for your 2015 taxes, you're going to want to make sure that you stay current on your current year taxes. So stay current for 2016. That means, you know, if you owed $50,000 for 2015, then you want to stop the bleeding. So you're going to want to start thinking about making estimated tax payments for 2016. Does that make sense, Katrina?
Yes.
Especially like somebody in your profession where you're a realtor and you're getting commissions.
I do that. Like I learned the hard way. Like, you know, what's that old saying that to do the same thing over and over again and never change anything is
insanity, right?
Absolute insanity. So, you know, it didn't take me much of owing the IRS, and I'm like, yeah, I'm gonna make these estimated tax payments. I don't even wait till quarterly. I pay monthly.
Yeah, I would suggest that people that are in businesses where they're getting checks, you know, on an irregular basis, they should probably just go ahead and take a percentage out of that check and send it in at that time. So
25%-ish?
Yeah, 25. I would say the range is like 20 to 30%. It kind of depends on how much money you're making, right?
Well, 25% would be a good gauge because you're either probably going to get a refund or owe a small amount. That's better than a big tax bill.
So a lot of people don't know this, but you can make your estimated tax payments more frequently than quarterly. So there's a big myth out there. Oh, you have to make it quarterly. Well, no, the IRS will take your money every day. If that's what you want to do, they will take it. They might start to complain if it's, you know, significant amount every day, I guess.
But monthly is not considered over.
No, and monthly for sure. And I have people that are my clients that pay weekly. But you're going to want to make sure that you go to the IRS website. That's at irs.gov and download Form 1040-ES. That stands for Estimated Tax Payments. Get the 2016 form. It just came out. And then make sure when you make an estimated tax payment to try to just fill out the coupon for the quarter that we're in. So, for example, we're in the first quarter. Use coupon number 1. In June, use coupon number 2.
So what about people with commission income? Like you talk about real estate agents. I know you've had numerous people over the years that have been your client. In that situation, essentially they could pay whenever they earn a commission.
Right, exactly. That's what I tell the real estate agents is when you get a commission, so you don't know if you're going to get a commission every month or every week. Maybe it's every couple months. Maybe it's every 3 months.
Yeah, the average agent, I think, sells less than 5 properties a year.
Yeah, so okay, that would be, you know, every 2 to 3 months. Go ahead, but let's say they make a $10,000 commission, just so the numbers are nice around. What I would suggest they do is go ahead and take out 25%, $2,500, and just send that to the IRS right away. That's out of their life now. They can't borrow it. That's what people do is they have good intentions. They set the money aside a lot of times, and then they borrow it because something comes up. Well, if you get that money out of your life and you no longer have access to borrow, then you will figure out something else.
Out of sight, out of mind. It's that whole zero-based budget principle, right? I'm going to tell my money where it's going before it just goes where it wants. Exactly.
So you know that feeling that you have when you get that commission check on that day, right? You feel kind of rich.
I don't, because I don't pay myself like that. Like I'm paid a flat salary, and then I do a little incentive on stuff that closes. So I probably pay myself less.
So I would suggest most real estate agents kind of have that rich feeling on that one day.
I guess at some point when I first started, I did.
Yeah. So if you just take that $2,500 out that day that you feel rich, well, day 2 you still feel kind of rich, but now you've prepaid the taxes, or at least a significant portion of the taxes, so you can't get in trouble. Or you get in a lot less trouble because you've got a lot more paid in at the end of the year.
Well, again, if you paid in $2,500, that swing probably can't be more than $500 either way.
I'll tell you, it's an amazing feeling if you've gone years as a self-employed person and your plan has always been, well, I know I'm going to owe at the end of the year and I'll just figure it out. It's an amazing feeling the very first year that you pay in estimated tax payments, and either you have a very small tax bill or you actually get a refund. I've actually had that happen where I paid in so much in estimated tax payments, I got some of that money
back. Or if you have kids, like I have 3, so that changes dynamics a little, right? You get that credit, I think. I don't even know. I don't do my taxes.
You do for sure. The funny thing is, I always think about it is that tax credit's not enough. I mean, those kids really cost a lot more.
I don't know how much it is. I just hope I'm getting the credit is all I want to say. So you're listening to the IRS Solution Attorney Show. I'm your co-host, Katrina Madewell, with Mr. Darrin Mish. And we had someone that called in, so if you want to call back, we'll catch you after the break. 888-404-1010. Sorry we couldn't get to you before the end of the first segment. Again, 888-404-1010. We will answer your tax question. Back in a minute.
Welcome back. I'm your IRS Solution Attorney, Darrin Mish.
I'm your co-host, Katrina Madewell. Thanks for having us in the car today and driving around. If you miss any part of the show, by the way, the whole thing will go on a podcast.
You can find the podcast at irssolutionattorney.com or on my website at getirshelp.com.
And you can call in this morning, 888-404-1010. Again, 888-404-1010. And if you're too shy and you don't want to talk on the air, that's okay too. You can call Darrin at
888-438-6474. That's 888-GET-MISH, M-I-S-H.
Yeah, 888-GET-MISH is probably a little easier to remember. So where did we leave off? We were talking about if you have that 2015 tax bill and you owe some money.
So at the office, we call that cutting the head off the snake. So if you, we're talking about keeping current, right? So don't continue to do, like you said, don't continue to engage in insanity by doing the same thing over and over, which is not, fail to plan and just try to figure out how to pay your big tax bill at the end of the year. Make some estimated tax payments. Go to the IRS website at irs.gov and download Form 1040-ES and throw some money at the problem for this year.
You can even do it online, right? It's online.
You absolutely can make some online payments. I've done it myself. It's pretty efficient and it's actually free. So there also are credit card and debit card solutions on the IRS website where you can pay in that fashion. And
the other thing, too, I want to comment on that just from an outsider perspective. Like I go in and pay the tax amount, but then they have all the breakdown withholdings, like the FICO, what's the SSI, whatever they are. I don't fill any of that in. I just put the one number and somehow it all works out.
Yeah, that's exactly right. If you're a wage earner and so you get a paycheck and you have taxes pre-withheld, then you're just going to use the federal income tax number on your W-2. So you don't have to worry about the FICA and the Medicare tax and all that stuff. You just have to worry about the federal income tax figure on your W-2. Now, on the other hand, if you're self-employed and you're not incorporated, then you're going to go ahead and file on a Schedule C, and then you're going to need to file on a Schedule SE, which stands for self-employed. And what happens there is, since nobody withheld Social Security, Mr. FICA for you, you get to pay both halves of Mr. FICA, of the self-employment tax. So instead of paying 7.65%, you're going to end up paying 15.3%. So self-employed people pay some of the highest taxes around. And so that's why you're going to want to talk to somebody, a tax professional, and talk to them about better organization. Perhaps you should form an LLC or corporation so you can reduce some of that tax burden. That self-employment tax is a killer.
And if you don't have the organization, like I can't stand the numbers and the details and the receipts and the paper, so I hand all that stuff to a bookkeeper once a month, and then she organizes it and it goes off in the magic blue envelope, which gets stored.
As the business owner and entrepreneur, I think that your what you do sounds like it makes sense. I mean, you should not be down in the numbers trying to keep the books because that's not what you're good at. That's not where you generate revenue. So bookkeeping, and paying somebody whatever you pay them, some small amount.
I don't know what I pay them, but it's worth it.
Yeah,
it's a fraction. It's worth it for me. It would take me 5 times the amount of time it takes them to do it.
So the moral of the story is you set up some organization at the beginning, and then you just go ahead and implement that and do that month after month, year after year, and that's a lot better than most people's plan, which is fail to plan. Right?
Exactly. So stay current on the taxes is a good thing. Don't let that snowball kind of catch up on you. And then what about people that ignore the letters and the calls and that kind of stuff from the IRS?
So this is one of my favorite kind of things in that a lot of times people just put their head in the sand like an ostrich, and they get that little orange slip from the post office that says we have a certified mail waiting for you at the post office. And, most people are at work during the day, and so they're not there for the postman. And a lot of people are under the impression that if I don't sign for that, if I ignore it, if I just don't pick it up, then it's not really real. And so I can't tell you how many people, countless people over the years, have come into the office and they said, well, I got a certified letter. And I said, great, can I see it? They said, it got sent back. I never signed for it. I was afraid. So don't be afraid.
So let me chime in on that, okay? Because you have somebody like me, like for the last couple weeks, my schedule's been 15, 16, 17-hour days. I'm leaving at 7 a.m., getting home at God knows when. The post office is not open at that time, and they certainly don't want to deliver it. What should they do? Sign the thing to leave it, or is there another option?
Yeah, I believe you can sign the back of the little orange slip, or you can find most people can find some time during the day to go back and try to pick that up from the post office, give them instructions to leave it. But don't ignore the IRS, okay?
It's not going to disappear.
Yeah, it doesn't disappear. Our slogan at the office is IRS problems don't solve themselves. I mean, they typically don't just magically go away, despite the stories that I tell during our last segment of the show.
Some of them go away, depending on how old they are. Darrin just kind of makes them go away, like boop.
Sometimes they go away, but they rarely go away on their own, but, if you don't have any guidance from someone who's been around the block a few times. So I would say just don't ignore the IRS. Don't ignore them if they're trying to reach you. The other thing that sometimes happens is, for bigger cases is an IRS revenue officer will be assigned to the case. That's a person that works for the IRS in your local area, and they're assigned to get the money. And so what they'll do is they often make home or office visits. So they'll come by, and if you're not there, they'll leave a letter and a business card. Don't ignore that person. That person has
Especially if they're sending somebody to your office. That's not a good plan.
That person has the authority to, seize your bank accounts, garnish your wages, basically make your life a financial hell.
Which we talked about this on the store. This is like you're going to go to the gas pump and try to swipe your debit card, and it's going to go insufficient.
I hear stories like that every single month.
Or buy groceries, and you don't have $5 in the bank. It's gone.
That's one of my big fears.
I have a question. My son, I caught him last night doing his taxes on his phone. Now, I have never in my life thought about doing my own taxes, much less doing it on my phone. He goes, no, I just downloaded TurboTax and I'm doing my taxes here and blah. I am scared to death he did that wrong. And not only he did that on the phone, but a lot of people buy the program, download it, put it on their computer. And that still seems too complicated, too scary. How do you feel about that?
That's Pat, our producer, who asked the question, and we talked about this situation a little bit before the show. His son is about 19 years old and worked in the military and had a part-time job at, I believe, at Home Depot. And he related that story to me, and I was thinking, well, that's probably just about the only person that I would recommend download TurboTax and do their taxes, because his financial situation was very, very simple. It's also a generational thing, right? I mean, you wouldn't even think to do it
Never.
On your computer.
Absolutely not.
And there's your kid doing it on his cell phone, because he really doesn't know any different. That's his world, is that when he was born, there was computers. He used them all the way growing up, and so that seems really normal to him. You told me a little bit about the situation, and I think that's about right. Now, I'll tell you what I see all the time, which is people, maybe they have a couple that comes to mind is a couple that had a number of rental properties, like 8 or 10 rental properties in another state, and they're doing their own returns using TurboTax. This return is like an inch thick of paper, and not surprisingly, they got audited because they made a mistake that they weren't even aware that they made. TurboTax is decent software. The thing that people don't realize is you must bring some knowledge to the table in order to prepare an accurate, complicated return with TurboTax. I've actually prepared complicated returns with TurboTax, but I brought some knowledge to the table before I did it. It's really easy to take a wrong turn on TurboTax and get yourself screwed up. And I think one of the biggest problems that TurboTax has is there's a running total of how much you owe or how much refund you're going to get in one corner of the screen. And so what happens is people reach a fork in the road, right? It's a yes or no question. And what they do is they click yes. Well, if I click yes, then I owe money. If I click no, I get money back.
Oh my gosh, that is dangerous.
And so
I had no idea. I've clearly never used TurboTax.
Yeah, it incentivizes bad decisions. And I'm not knocking TurboTax. It's fine software, but you have to have some experience to use it correctly in most situations. Now, if you have two wage earner, a couple they're both wage earners having appropriate taxes withheld and they rent or something like that, and they have nothing else financial going on, fine, not a problem at all. But you get into a self-employed person, you get into real estate, you get into
like the minute you're a homeowner is a fine example. You could both be wage earners, but if you own a home or you have kids, anything that's going to complicate the situation, spend a few $100 and let somebody do it that knows what they're doing, because those rules change every year.
Yeah, you get into those itemized deductions on Schedule A, like you're talking about the home mortgage interest, and you're just asking for trouble.
Yeah, I was going to bring that up about TurboTax. If they used TurboTax from 2 years ago, would it automatically say it needs to be updated, or would not do that because they want you to purchase another one and you wouldn't know about things that have changed?
Yeah, TurboTax comes out every year, so it's a different software program every year, and so it incorporates the changes for every year. But sometimes there's changes mid-year that have to be incorporated, and the software will automatically upgrade itself to take care of that. So it's not really a software problem.
You got to pay for the software. So, like, how much does the software even cost? Do you know?
I think $39, $49, depending on which. You get the deluxe 1 or 2 or something
so
like that.
So for a few dollars more, really, you could have someone file it that's probably going to find some deductions that TurboTax didn't find anyway.
I would say your average tax preparer is going to charge somewhere between $300 to $500.
Simple return might even be a little less.
Yeah, a very simple return like Pat's son. Yeah. That would be very inexpensive, I think.
Well, you're listening to the IRS Solution Attorney Show with Mr. Darrin T. Mish. I'm your co-host, Katrina Madewell. It's about that time at the bottom of the hour. We have to take a quick break. We are here live in the studio this morning, and we'll take your calls at 888-404-1010, 888-404-1010. Save that number in your phone. Don't forget you'll be registered for a free FPU course, and we're glad to have you this morning. Thanks so much for listening. We'll be back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474.
Welcome back. You're listening to the IRS Solution Attorney Show with Mr. Darrin T. Mish, and I'm your co-host, Katrina Madewell. Thanks so much for listening to us this morning. And so the earlier part of the show, if you missed it, we were talking about someone that was getting ready to file their 2015 tax bill, and they had, or their tax return, and they realized that they owe money. And they're like, oh, and so my question to Darrin was, okay, you realize you owe money. It's still early. It's February. It's not April 15th yet. Well, what's the best course of action if you don't have the money?
So we had talked about, don't panic was number one. And number two was, let's see how to, get current so that we don't continue to have this happen again. So either adjust your withholding at work, fill out a new W-4 and get that number fixed if that's what the problem is. You're just not having enough tax taken out of your paycheck. Or make some estimated tax payments on Form 1040-ES that you can pick up at the IRS at irs.gov.
Well, let's say you didn't do that.
If you didn't do that, don't ignore any attempts that the IRS is making to reach you, which they wouldn't if you only owe for 15 because you haven't filed yet and it's not required that you file. So the next thing I would say is have a plan. Have some sort of plan in mind for how you're going to resolve this issue before you file the return. It's not common, but I've seen people file large balance returns, in February or March before it was even due. So by all means, get an extension. There's an automatic extension now that's available to everyone until October 15th. Years ago.
But do you think that's a good plan?
I would say, hey, if that's what you need is to get an extension to have time to calm down enough to devise a plan or meet with somebody who can help you with the plan, then by all means you should request an extension, because what happens is the filing of the balance due return, that triggers certain things at the IRS. It's going to start the collection wheels moving. And so if you don't file the return until October, then the collection wheels won't start moving until October at least.
So it doesn't get lost in the shuffle with all the people that are getting the refunds? Because that's usually the people that file early is the ones that are getting a tax refund. You don't think it gets lost in the shuffle a little?
No, it doesn't get lost.
See, you know this stuff. That's why I'm asking it.
No, I'm actually surprised. I'm a small government guy. I don't really believe that the government should be as large as it is. but they're remarkably efficient at processing tax returns and processing balance due returns and processing checks. The running joke in the office is if I file an appeal or if I'm asking the IRS for something and I have to send it in via mail, by all means, I must send it certified mail so that I can prove that they got it. But I've sent 6-figure checks to the IRS with a regular first-class stamp on it, and it's gotten there 100% of the time. So they're very efficient at processing payments.
Just not so much the correspondence.
Yeah, the correspondence, I don't think it rises to the same level of importance for those folks. So go ahead and get an extension if you need one in order to, gain some time to try to figure out what you should do.
When does the late filing actually kick in? Like when you don't, because you can get another extension, right? Even after October, I think, like one more month or something? Or
no, what you're thinking about is you're obviously old enough that you've filed some returns in your life. About 10 years ago, they changed the rule. You used to have to get 2 extensions. There was one you got till August automatically, and then you could request another extension until October. And I want to say maybe 10 years ago they changed that to just now everybody can get until October extension.
Geez, you can tell I'm dating myself. I haven't done any of this in a while.
Well, I was one of those people in a former life that had to have the October extension every single time, too. So I remember that as well. So if you have a very small liability, let's say, I don't know, under $10,000, maybe under $20,000, then you're going to want to go ahead and contact the IRS to try to make a payment plan. The formal name for a payment plan is an installment agreement, okay? So you're going to want to go ahead and call them and get that worked out. If you owe $25,000 or less, it's automatic, basically. If you've not had a prior tax liability due in the prior 3 years and you owe under $25,000, it's an automatic installment agreement. The funny thing about this is that everybody, when I ask people, no matter if they owe 20 grand or if they owe 2 million, I say, well, what kind of monthly payment would you be comfortable with? What do you think the number is?
$100?
It's $300. No matter what. Everybody's like, well, I could probably do $300 a month.
That's thinking a car payment, right?
I don't know. I don't know where that comes from, but it's been the same $300 for, almost 20 years now. So interesting. Inflation really hasn't taken over in that part of our mind, I don't think. But, yeah, you can contact the IRS and try to work out an installment agreement. Just make sure if you're making estimated tax payments, like I just told you to, that you make sure that that's budgeted into whatever you negotiate your payment at.
I was going to say, how do they derive, there's no formula they calculate what the payment needs to be, or they just work it out with you? Generally
speaking, without getting too boring and dry here, they're going to want you to have that thing paid off between 60 and 72 months.
That's kind of what I was wondering.
In those automatic installment agreements.
So you might have to trade your car payment in for your IRS installment plan, basically.
Well, let's hope not. And that leads me to my last comment on this particular, line of thinking that we're talking about, and that is, get in touch with somebody who's handled a tax problem or two. It always makes me laugh when some clients come in and they tell me how they want me to handle the problem. And I just kind of chuckle to myself, and I'm thinking, I've done this, thousands of times. I have an idea what's going on here, and I have an idea what's possible and what's not possible. And I can tell you with a high degree of confidence, Katrina, that I've never had somebody give up their car so that they could pay the IRS. So a car, actually, both the operating and the ownership expense. So what are allowable expenses with the IRS? And what does that mean? That was a bunch of jargon, right? So your car payment up to a certain level and your fuel, maintenance, and insurance, those are all allowable expenses. So the IRS can't, only in the rarest of circumstances, could they make you get rid of your car so that you could pay them.
Well, they want you to keep working so you can keep filing taxes.
My favorite story about they were going to take a car was I had a client that was actually a corporation, and the corporation owed a significant amount of taxes, 6 figures at least. And the corporation was out of business, and the only thing it owned was about a $40,000 free and clear, super hot rod Corvette. And the only shareholder of the company, that Corvette was his baby. And he had been contacted by a revenue officer who wanted to seize that car really, really badly because it was red and it was one of the high-end Corvettes that could do, 150 miles an hour, 200 miles an hour, whatever. And the revenue officer was almost giddy when he was talking about how he was going to seize the car. And cars are pretty easy to seize if you think about it. Procedurally, they're pretty easy. You send a wrecker out, they hook it up, they haul it off to a wrecking yard, and it's seized. You know,
those guys, if you've ever caught any of those shows, they're like following you around. You'll be going to 7-Eleven to buy a cup of coffee and you come out and your car's gone.
Yeah, it happens real fast. Now, there's some paperwork, obviously, the IRS has to file and all that. And in that case, what we did, because the shareholder, the human being that I was representing as well as the corporation, really wanted to save that car. And so we made a deal. We cut a deal with the IRS to save the car. And we didn't have to pay the full price either, the full fair market value. We had paid some negotiated, lower number. Despite how giddy the revenue officer was to seize the car.
And he got to keep the car?
He did, in fact, get to keep the car. He told me a story later that he in celebration, he drove it across Alligator Alley at about 150 miles an hour. And I'm like, that's a different lawyer.
It's just not a plan. So Darrin does get a lot of questions on his Facebook and his Twitter feed, which is at Darrin_Mish, like fish, but with an M.
Exactly.
And
Darrin_Mish.
You can hit him up on Twitter or Facebook or call him at 888-GET-MISH. But one of the questions that he had was from Robin, and she says, I live in Michigan, and I catch your show from your podcast feed on your site at theirsolutionattorney.com. Recently, I hired a tax attorney from another state and completely forgot to ask him about the back taxes I owe to the state of Michigan. So we're talking about state taxes here. Is there any chance that they can be negotiated with as well? I asked my attorney the same question, but was just curious to hear your take on it.
Because we're down here in Florida and we don't have state income tax, this is something that, a lot of people don't think about because it doesn't come up. But also because we're in Florida and we have such a transient population, this question gets asked of me quite a bit. The states actually are more aggressive than the IRS in collecting their money. And the reason is when the federal government runs low on money, when they have a deficit, they just print more money.
I was going to say the same thing.
But the states can't print more money. They actually have to balance their budgets. And so they're much more aggressive in getting their money. Now, I can't, unfortunately, answer the question specifically, does Michigan have, an offer and compromise program where you can make a deal, for example? But many, many states do. I also don't know off the top of my head, since I don't practice in Michigan, if there's a statute of limitations for the collection of tax like there is in the IRS realm. Let me back up and explain that. For federal income taxes, the IRS basically only has 10 years from the date the taxes are assessed to collect the money. Some states have a statute of limitations like that, and some states don't, so you're going to have to look that up. I actually do and can represent clients in these state issues in every single state. Have not ever done one in Michigan. I have done them in Virginia and New York and California and Maryland and a variety of other places. But most states do have some sort of offer program where you can cut a deal with them as well. Now, this advice that I'm going to give is a little bit, or this suggestion that I'm going to give that's a little bit different than I've given in the past is you should probably work out your state tax problem first before the federal problem. That's because if you're going to go ahead and work out an installment agreement, a payment plan with the state, you're going to want to go ahead and do that before the feds, because the feds changed the law a few years ago, and those state tax payments are actually considered allowable expenses. So what that means is they're going to go ahead and say, okay, if you're paying the state $200 a month or whatever it is, that's money that's not available to pay the feds, the IRS, the tax bill. In the past, the IRS attitude about that was, well, the heck with the states, you should pay us first. So we're not going to consider that an allowable payment. And that was really kind of a confusing scenario for folks. But I would say for most people that owe a state tax problem, you're going to want to go ahead and settle that problem first and then follow up with the feds after that.
We also had another question from Rick in Tampa, and he says, my stupid client sent me 2 separate 1099 forms for the same work. Should I just throw one away?
No, you should not throw that away. You should contact the client, and you should try to get them to issue a corrected 1099. Just one. This is fairly common. I actually handled a case that was a tax court case. It was one of the train wrecks of the week in the past, and that was where there was 2 1099s, and one was for like $100,000, and one was for like $100,750. Clearly the same work. What happened is the second one was correct. The higher one was correct. The first one was incorrect. Well, they both got filed with the IRS. The IRS counted those as 2 separate 1099s for $200,000 income, not $100,000. And what happened is we ultimately had to file a notice of deficiency, or that we got a notice of deficiency from the IRS. We had to file a tax court petition, which is where a taxpayer can actually technically sue the government. And once IRS counsel saw that situation, it was the fastest case I'd ever handled. I got a stipulated settlement immediately.
So the simple way to fix that is to have the guy that sent the 1099 file a corrected document?
Yeah, that's the simplest way.
Fast,
if you can get them
way.
to file a corrected document, that's going to be the much less expensive way than waiting for a notice of deficiency and paying a lawyer a bunch of money and then filing a tax court petition for sure.
That does not sound easy or fun.
It's fun for me.
You're listening to the IRS Solution Attorney Show with Darrin T. Mish. I'm your co-host, Katrina Madewell. If you have a suggestion or a topic or an idea for the show, we are very open. You can call in with any questions, tax, IRS scenarios at 888-404-1010 or hit Mr. Darrin Mish up at Darrin_Mish. And he's also on Facebook, and we may make it the topic of the show. We'll be back in a minute. Good morning and welcome back to the IRS Solution Attorney Show with Mr. Darrin T. Mish. I'm your co-host, Katrina Madewell. And, just before we left off, we won't make you the example, but your story, I should say. So we have Gino. He's actually holding with a call, so we're going to take that so we don't run out of time. He's been so patiently holding for a couple of minutes. Good morning. Welcome to the show, Gino.
Oh, good morning. I have a question. I was a beneficiary of my uncle's estate, and I received a policy, I say around $30,000. This was one of them, and it was, I want to say it was an IRA. It was with an insurance company, American General. So they took 10% out, and they sent me the rest. They said they couldn't roll it over to anything. So this year I got that. I think it's called a 1099 or something like that.
Right.
All right. Now, what will be my taxes on that? Do I have to pay more or?
It's impossible for us to tell you on the air here, but what you're going to want to do, if you don't normally have somebody help you with your taxes, you're going to want to have them help you for this particular year, for this one issue. Right. And you're going to have to pay tax on, if it's an IRA that you inherited, then you're going to have to pay tax on the proceeds from the IRA.
Okay.
So the 10% they took care of, this is a common problem, by the way, is that when you do an early withdrawal from an IRA, the companies will often withhold the 10%, and people think that that's the whole burden, the whole tax burden, but it's not. There's there's probably a tax liability coming for the proceeds of the IRA, but since I don't know enough about your specifics and it's not really a private place to talk about it, I would suggest that you get some help on that one just for this one particular year.
Or, you can call Darrin's office. He'll be back in a little bit after the show, 888-GET-MISH, or one of his lovely, fine staff can answer the phone and make an appointment.
Yeah, we can do that for sure, Gino.
Okay, well, thank you very much.
Thanks for calling in. I appreciate it.
Thanks for the call.
All right.
So, next, you have a pretty cool story to share.
Yeah, there's a story that's in the news right now, and it's about this former, D.C. drug kingpin. He actually went to prison about a decade ago. He served 9 years in federal prison for drug charges, and during that time frame, he ran up a $16 million tax bill, and he was he actually pled guilty to tax evasion and the drug charges, and he did 9 years in federal prison. Well, he rebuilt his life, and he he became a success and started his own business and whatnot.
Wait,
but
from prison?
After prison, he rebuilt his life, and he made another go at being in business for himself again. But he's kind of a slow learner because he forgot to pay his taxes again, and he has an unpaid tax bill of $1.8 million on nearly $5 million in unreported taxable income, and it looks like he's going to be going back to prison because he just pled guilty again to tax evasion in federal court on Tuesday, and his sentencing is coming up. But I would imagine that he's going to get whacked pretty good because he's apparently a pretty slow learner.
Right.
I don't begrudge the guy at all having gone to prison one time, paid his debt to society. He came out and he proved that you can be a success even after you come out of prison. But he just forgot to put that organization that we were talking about back into place so that he could pay the tax man his due. I'm not in love with the tax man. I don't particularly enjoy paying taxes, but it is unfortunately an obligation that we have as citizens of this great country to pay something in taxes for the most part. So I think he forgot about that part, and best guess is he's going to get another few years at least to remember that for the next time. He's obviously a talented guy.
I have a question real quick, just kind of spinning off of Gino's, not to go back to his situation, but aren't there cases as well where inheritance is not taxed? Because I thought I heard that from you before on another show.
There are other cases where inheritances are not taxable. For the most part, the general rule is that proceeds from life insurance are not taxable. But there's a little loophole in the law where the proceeds from those IRAs are, in fact, taxable, as far as I remember. And that's because, for the most part, IRAs have not had any taxes paid on, in on them. So that's why I felt like Gino needed some help for that particular situation.
So we didn't exactly get the train wreck music queued up. Do I have to make like a train and crash? There you go. There's your train wreck music, Darrin.
This is the segment of the show where we talk about the IRS train wreck of the week. And what that is that's where we talk about somebody who came into the office and they were pretty much a mess, and then ultimately through our assistance and our help, they ended up with a happy ending.
Darrin prettied them all up, got them all dressed up.
Yeah. So in this particular case, what had happened is I had a husband and wife come in, and they had not filed tax returns in a number of years. Pretty common for people to come in and they haven't filed 5, 6, 10 years worth of returns. We helped them to get their returns prepared, and at the time, the husband was, in the years that we prepared the returns for, he was a mortgage broker, an independent mortgage broker. And you remember back in the days of the real estate boom that I call the Wild West, those guys were making a lot of money, and he wasn't filing his tax returns. But by the time he had come back into me, he had left, his private business because it went under during the Great Recession, and he was back working for a big bank doing mortgage underwriting. But
that's scary.
Well,
that's scary. Just from whatever.
I'm making no judgment calls on that, but
it was just my non-biased, non-attorney opinion.
Ultimately, we ended up filing those returns, and he owed $169,000 to $169,248.71. Okay. What we did is we filed what's called an offer in compromise, which is where you can make a deal to settle for less. It's based upon a relatively simple math equation, and it goes like this, real briefly. Monthly disposable income times 12 plus your assets equals the amount of your offer. And so, as a brief example, if your monthly disposable income was $100, 100 times 12.
Meaning that's all you have left after all your bills are paid.
After all your allowable expenses, all you had was $100. 100 times 12 is $1,200. Let's assume you had no assets. You can settle a big case. Doesn't really matter how much you owe for $1,200. Now, this is certainly not a typical situation for people, but that's the formula. So in this case, what we did is we filed an offer in compromise, and we waited because the IRS doesn't have enough people to handle these cases. We waited between 6 months and a year, and ultimately we got that thing settled for $6,504. So I did some fancy calculation. That's 3.8 cents on the dollar.
So I imagine the longer that wait time is, the better the scenario might get?
Not necessarily. It's just the wait time is a function of how few people that the IRS has processing offers and how many offers are being filed. So there's kind of a cool exception in the law, and that is if the offer is more than 2 years old, then it's deemed accepted. So they do have a time limit. But right now, most of those offers are taken somewhere between 6 and 18 months.
Do you find that some of your clients are just absolutely biting their nails while they're waiting for the IRS to respond?
Some of my clients email me, monthly saying, or weekly even saying, what's going on? And I have to try and calm them down and say things like, it took a decade to get here. It's going to take a little while to get out.
No news might be good news, right? Yeah. So you're listening to the IRS Solution Attorney Show. Thank you so much for sticking with us this morning. Hopefully you learned a little something from the show and you enjoyed it. If you know someone that has an IRS problem, send them on over to Darrin Mish, 888-GET-MISH. We'll be here every Thursday at 9 a.m. Thanks so much for joining us. For this week, we're out.